What's going on, guys? Hope you all are good and enjoying life and the summer. I wanted to make this a quick video talking about the current world economics, what's happening in the financial markets, and how to prepare, and also talk about possible food shortages that we might be experiencing towards the end of the year. I know what I just said looks like a dystopian tale, but to be honest, if you're currently looking at the metrics that are currently happening, it's quite scary. From stock market, from your crypto, from your real estate, everything has been turned upside down. And the major players that are causing this is, of course, the inflation, which is caused by endless amount of money printing by the government that did not manage it well. If you go to grocery stores, or if you're going to out and buying stuff in the restaurants, you're going to notice that you're going to be paying sometimes more than 15-20%, but they say the inflation is only at 6 or 7%, which is a massive understatement. I believe inflation is way over at least 10 to 15%, depending on what you buy. The price of meat has gone up, gasoline has gone up, everything that you can think of is going up, even the rents are going up. That's what happens when you got so many cheap money chasing after few goods. The prices go up. And we saw this happening when the money was being printed. All the asset classes have started going up. Like you had the massive boom in the stock market, the cryptos, the real estate. If you happen to be lucky and happen to own the asset at that point, you may have locked in some gains and equity, which is good for you. But now that has been changing ever since the feds have started to raise the interest rate. So normally the economic cycle goes like this, right? So when the inflation kicks in, the government steps in to try to do something to curb it down. But what happens is when they increase the interest rate, the money supply contracts. So it's called quantitative tightening. So the banks, they don't lend out money to everyone. Businesses, since they don't have a lot of loan, or like they don't have any financial support from the bank, and also with increasing cost, they'll be forced to cut down their operating expense. So you could see like a hiring freeze, you could see like unemployment going up. And when that happens, the consumer confidence, of course, goes down, and then this gets reflected, first of all, in the liquid market, such as the cryptos and then the stock, which we are already seeing because of the quantitative tightening. When the interest rates going up, the money supply is getting contracted, and we are seeing the effects of that in the liquid market. Eventually, this will also propagate to the real estate market, but it takes some time to get there. So unlike the liquid market, the real estate usually takes some time to reflect those changes. We're gonna see more and more of real estate correction very soon. It's just a matter of time, because we already see that the market has shifted, and we saw what's happening in the stock, the cryptos. And for the real estate, we will see it pretty soon, especially with the higher interest rate. It's going to increase the borrowing cost, and it's going to tap out a lot of people. People are over leveraged on their home. They are barely getting by. Whenever the interest rate goes up, they're going to feel the effects of that very soon. Yeah, so we'll see what's going to happen. But at the end of the day, things are starting to change. And in an ordinary market, when inflation is naturally caused not by money printing, higher interest rate usually helps with that. But since this time around it's like different, they printed way too much money, and inflation is in double digits. I don't see it slowing down unless they raise the interest rate to to double digit as well. The interest rate is like way too low right now. Like we almost had negative interest rate for during the pandemic, and we're starting from the ground zero, and we're trying to catch up with inflation with 0.5 and with 0.75 hikes. I don't think so. Like we'll be catching up to it. That's just what my hunch is saying. So worst case, we might be going into stagflation, and stagflation is similar to inflation, where the prices are continuing to go up, but also we're in a situation with unemployment going up. So just like worse situation than inflation. If that happens, I don't know what might happen. I have to look into it. So basically, like I'm saying all this stuff is because a lot of people are not aware of this. Everybody's just enjoying the summer, and there's so much shit that's going on behind the scenes. The tide has turned, and the people who are gonna be thriving in this time are the people who prepare in advance, who see all the stuff that's coming. They change their strategy for their financial portfolio. They just plan in advance, and unless you do that, you're gonna get drowned by the bloodshed that's gonna come to the market. Hopefully you're in a good place, and I just wanted to end this video with giving you guys some practical tips. I know a lot of these guys, they just tell you this, like the fearful things that are gonna happen, and then they just leave you like, okay, all this stuff is happening, now what? The good news is that there are things that we can do to survive in these times. And from my planning and from my brainstorming, this is what I find the best way to navigate. If you have cash, keep the cash, wait for the right opportunities. Now is not the time to be jumping on investment. You don't want to be catching a falling knife. Don't get into this FOMO from your realtors, from your investors telling you, hey, the market's gonna go back up, you gotta get in right now while it's down. No, I don't think the market is going to go back up anytime soon. We're going to be in a downturn. Although the downturn is not going to be linear. We might have like a downturn and then like a slight spike and then a downturn again. Downturn is never linear, right? So you got to, just because it's going up doesn't mean like you need to get back in. So you're going to start to see lower highs and lower lows. So that's like that. So it goes up, down, 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 down. Eventually it's going down. So be very mindful of what you're putting your money in. The best thing you can do is if you have made some good gains, liquidate that. Just sit on cash, wait for the opportunities. And you may be wondering, okay, what can I do with my cash in this time? Well, you can start a business. I know it sounds contradictory to the times, like why would you start a business in a recession? But you'll be surprised, like there's so many opportunities if you can focus on the right type of business. If you look into products like entertainment during tough times, people want to have a sense of escapism. They want to escape the reality. So industries like Netflix, entertainment industries, they tend to do well. Like beer, like alcohol industries, they tend to do well. And people still going to be having health and physical problems. So if you can find some products in that aspect, it's going to do well as well. So you got to sit down and think about what kind of business you can start that might survive in this time. Storage business tend to do well as well, because a lot of people, they move from A class neighborhood to B class and C class and so on. And if you're looking into stocks and cryptos, you don't want to be timing the bottom. you can try to do dollar cost average into S&P 500. I try to stay away from a highly volatile assets such as cryptos, because you don't know what's going to happen, and you got to be very careful about how you manage your money. It's very easy to lose it. So the game of money is to try to minimize the risk while maximizing the profit. So always look for opportunities where you can double it with minimal risk as possible. And if you got good amount of cash in your bank account, you can look into real estate. Real estate, you got to be careful. You have to make sure that you're not overpaying for properties anymore. And I would also wait until the July interest rate hike to see how the market is going to behave. You would ideally want to buy a property if you're going to be shopping in this time 10 to 15% below the market value. Don't be rushing into any kind of deal, because if you overpay, you're going to be holding the bag. So you got to find properties that are undervalued, at least 20%, so that even though when the market tanks, you have that margin. And it'd be better for you to invest in a property that has a good cash flow, so you can just rent it out. Either you can live in the basement if you're alone, or just rent out the top floor, or you can just rent out the whole home to have some positive cash flow. That way you're able to ride it through. You're not paying for your mortgage out of your pocket. You just find a good tenant and let them pay their mortgage. So those are the 3 things I can tell you that I've been thinking about doing. So just save up on cash. Cash is king during this time. Wait for the right opportunities. If you want to invest in stock, just dollar cost average into S&P 500 or diversified portfolio. You can look into stocks like Coca-Cola. They tend to do well. The dividend stocks, they tend to do well as well during tough times. You can look into gold and silver. Crypto, be very careful, not too much, because it's very highly volatile. And if you got good amount of cash, put it into real estate that has some cash flow, so that you're making money while your tenants are paying for it. Now, I also wanted to touch upon the supply chain, the food shortage that I mentioned at the beginning of the video. I do feel like there's going to be something coming towards the end of the year. It's just my hunch. If you look at what's happening with all this Russia-Ukraine bullshit, I feel like it's going to affect the supply chain. I mean, we're already seeing what's happening to the oil, right? And the gasoline. Imagine if the price of that just skyrockets even more, and combine that with inflation, unemployment, recession. Things could get really ugly. So it's better for us to be prepared when we have everything available. You don't want to be running to the stores to the last minute when shelves are empty. That's when panic starts. You don't want to be in that position. So while the food is available, I highly suggest you stock up for at least 6 to 1 year. Just invest in some portable propane tank cooktop. Store up on some non-perishable food, something that lasts forever. Like dry white pasta, canned food that has a long lifetime. Just look into it. Stock up for at least 6 months to 1 year. It never hurts to store food, right? And it's always best to be prepared than to be left in a position where you're surviving and have nowhere to go. And of course, not everybody is going to be in an ideal position, because we already went through tough times. So it's important that if you're resourceful, just try to help people in your friend circle, your family, whoever is not in a good position, so that way you're paying it forward, right? During these times, we got to stick together. That's the only way we can get through it. So that's it, guys. So I just wanted to make this short video to warn and provide tips on what to do. I hope you're doing well, you've been taking care of yourself. And until next time, my friends, take care, be kind, and see you soon. Bye.